Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to CEO Steve McQuillan and CFO Stephen King of Avingtrans, a leading engineering firm producing specialist products and services for the nuclear, energy, industrial and defence sectors. So welcome, gents.
Hi, Paul. Good to see you again.
Yeah, well, lots been happening actually since we last spoke, not least today's inline interims and positive outlook. But before we sort of dig into the details, I don't suppose, Steve, you could quickly give us a bird's eye view of what's happening at the coalface in the sort of the company's key markets, perhaps starting with nuclear.
Yeah, so the markets are in pretty good shape, generally speaking, for us at the moment. Everybody is keen on keeping or expanding their nuclear assets now, particularly post the Russia-Ukraine events. So we're seeing more business coming in from nuclear, particularly North America, and to some extent in Europe, but particularly North America. We're seeing more business on the hydrocarbon side because oil and gas has opened up again in the North Sea following the government's windfall tax initiatives, so we're seeing more activity there. And then, of course, we're also seeing more general activity on defence and infrastructure, as you can imagine, for the same reasons. So those are our three main markets, and they've all got positive trends going to them. And we'll come back, no doubt, to order cover and whatnot later.
Yeah, sure.
Pretty robust. I would say on the counter, again, we'll talk more about it, I'm sure. The counter issue for us is supply chain disruption continues to be a problem for us, Paul, as you'll be hearing from, no doubt, everybody else. Some signs of that easing, but it's going to be some time before it normalises. Still, it's still causing us trouble. But you know, we're knife and forking our way through it. We're dealing with it. It's okay. So we're in pretty good shape.
Two big contracts we've talked about sort of in the past that can really move the dial. First of all, that sort of the storage boxes in Sellafield, the sort of second phase. Obviously, you're well in there, and how's that progressing?
Yeah, it's never totally smooth, because Sellafield regularly want to make changes to designs and how they do things and stuff like that. Having said that, we are regularly delivering boxes now. They're going out every week basically, and that should get better and better as we go forward. I think as we told everybody last time, we're the only people making those now. The other outfit who were doing it pulled out. So that leaves us basically as the only game in town in that sense at the moment. So that's a good position to be in. What we're still not clear on is when they'll eventually tender the next big contract, which is the 900 million for more boxes. But in the meantime, it doesn't matter. That's not in our forecast.
Did I hear that correct? You said 900 million.
900 million is the next contract. Yeah, I mean, we wouldn't get all of that. They're bound to want to split it between 2 or 3 suppliers. But obviously, being the only game in town now, we're pretty well placed to do a good proportion of that when it finally comes. But as I say, not in our forecast because we don't know when it's going to land.
Okay, and what about the HS2? How are we progressing with that, with the blast-proof doors?
Yeah, great. Actually, really good progress there from Mike and his team up at Booth. They recently passed the kind of internal approvals for HS2 with the digital model of the doors. So the finite element analysis of the doors is completed, and HS2 are happy with that, which means we can now progress to commence manufacture. That manufacturing won't really commence this financial year, but it will probably start next financial year because we have to level load manufacture a bit, because otherwise they want all the doors at once, as it were, once all the tunnels are done, and we can't do that. So we have to level load, and we have agreement to do that. So manufacturing of those doors will start next year.
And have you seen any pickup in the hydrocarbons? I mean, is it on oil and gas and stuff? Because obviously there's been a big thirst in the North Sea. Yeah,
particularly North Sea, as I say, because what's happened with the government's windfall tax is people get most of that money back. The operators get most of that money back if they invest in their assets in the North Sea. So whereas a lot of them were preferring not to do much about those assets in recent years, they are all now heavily incentivised to do something about it. So we've seen both more aftermarket opportunities coming our way in the North Sea, but also more OEM business than we'd seen before. And you can see that there's been more OE growth in the first half than actually aftermarket growth. And partly that's because of North Sea coming back online again. And partly it's nuclear as well, but part of it is North Sea coming back online, which is good to see. I mean, we know that's a more cyclic market than some of our other markets, but it's good to see it on an upcycle now.
Good. And then Stephen, obviously Steve's sort of bringing a lot of business in. What's the sort of key messages from the interim results?
I don't bring any of it in. The guys in the teams bring it in, Paul. But
you're too modest. So Stephen, what's the sort of key messages from the first half results?
Well, I mean, it was a pretty good first half, Paul. Positive signs. but not without trial and tribulations. In particular, as Steve just mentioned, the supply chain are causing us, probably no more than anyone else, but still causing most of engineering a bit of a problem. But the order book is very strong. I think we put out there that we're over 90%, which is similar to last year, and the order book for 24 would be over 55%, which again would be in line with the prior year. But you'd expect that a little bit with these, as you just mentioned, or Steve just mentioned, these two large contracts with HS2. That's big. That's over 32 million, and Sellafield is over. It's got to be over 60 million still. So there really are long-term contracts, as we call them, giving us base load there, in particular for the PSRE business. I mean, good increase in revenue, mainly in EPM. So we just discussed a bit.
Yeah,
about
I saw it was 12%, wasn't it? Like for like increase in top line growth.
Yeah, absolutely. It's a strong one. I mean, as I say, most of the growth came out of EPM, some in PSRE. PSRE had a very strong past couple of years, if you remember. So a bit of consolidation is never bad while we wait for the hopefully the next big contract or contracts, should we say? And the increase in OE just has a little bit of a detrimental impact on the gross profit margin. But if it adds to the bottom line, it's all positive, isn't it?
Yeah, I know. I saw you've managed to sort of like keep the resilience in those EBITDA margins, because they're pretty flat year on year, aren't they? Even actually, I think you've had a marginal dip at the gross, but you've kept it at the operating level pretty much flat.
Yeah, at an adjusted EBITDA, I think it was 12.9, but the 12.8. So pretty stable, and on increased revenue. Of course, that, as we say, drops to the bottom line with EBITDA being over 6.5 million, which is great.
And I saw your cash flows improved as well, haven't you? You've been allowed to pay a bit of a nice little dividend as well.
Don't mention cash, Paul. We like to keep that quiet in finance. These operation guys will be after it to buy a few bits and pieces. Well, I'm sure we'll come to the M&A.
Okay. So moving swiftly on, there's a couple of nice investments into that healthcare, Steve. Can you take us through what the big strategic picture is here? Because it seems to be absolutely getting some real momentum now. Yeah.
So just to remind investors or folks who are not less familiar, we have two key investments here. We have a business called Magetica, which is working on novel compact MRI systems, not using helium. So that's a big difference from most traditional MRI systems, but it's still superconducting, so high field. So good images. And secondly, we have a quite significant investment now in a business called Adaptix, which is based in Oxford. And they're following a very similar path to Magetica, but their technology is in 3D X-ray, 3D tomosynthesis, as it's called. Both of these guys are looking to disrupt those markets, those imaging markets. They're following parallel paths, therefore there's a lot of overlap between the two in terms of distribution channels, clinical, regulatory pathways, technology, suppliers, all sorts of stuff is similar. So they're working closely together as they move forward. Adaptix is about a year and a half ahead of Magetica. They have recently been awarded the so-called 510K, which is permission to sell their orthopedic product in America. And that's a big step forward for them. So they're gearing up for those sales in America. Magetica plans to get that same regulation approval within the next 12 months or so. And they'll be applying for that later this year and then launching the product, the MRI product, at the large imaging show in Chicago Steve and I went to last year. They'll be doing that launch this year in November time in Chicago. So both businesses making really good progress. Both of them have disruptive technology, which changes the game as far as X-ray and MRI is concerned, although it's for very specific niche markets, so we're not trying to take on Siemens, Plessey, GE. We're seeing it as going into different settings than where GE and etc. would normally be.
So is this for hands, wrists, and sort of feet hands, and stuff like that?
Knees, ankles, is that sort of thing. And about 20% of medical imaging is in orthopedics. So it's a big chunk of what happens in orthopedics. And normally, though, you'd be putting a full body machine to have that kind of scan done. But what we've got is a much smaller scale machine where you can site it in an orthopedic clinic, for example. And there are a lot of those in America, 28,000 orthopedic and walk-in clinics in America, and that's the target for us, not really hospitals, because they are pretty much sewn up by GE, Philips, Siemens, so we wouldn't be wanting to try and go there. We might sell some product there, but that's not the target. The target is to get these products into settings they wouldn't normally be for orthopedics. And then Adaptix are more advanced than us, than Magetica on the veterinary side, and they've already started selling products into vets as well, where again, they would have kind of conventional X-ray equipment, but nothing else really. So that's starting to get traction as well. So really, really good progress by both businesses, and quite excited to see that moving forward. So as you've seen, we've made further investment in both businesses. Magetica was a public business before in Australia, so you have to do that by a quasi-public method, which we've done now. We concluded that in January. And Adaptix, we put a couple of million more in by means of a convertible loan note in December. So both moving forward nicely, and we're quite excited to see the progress there.
And I guess presumably with Adaptix, as it's sort of 12 months ahead or there and thereabouts, and there's a sort of similar distribution, etc., then it'll accelerate the commercialization for Magetica as well, assuming that they get approval.
Yes, that we're already seeing that effects of that, in terms of them being able to pull Magetica forward in various ways because of the similar pathways, and stop Magetica tripping over some of the things Adaptix have inevitably tripped over as they've gone through the process, because they're first in the line, really. But again, both businesses making good progress, so pleased with that so far.
Good. And then, Stephen, just on that, just going back to the sort of the M&A side of it, you bought a business, didn't you? Sort of Ormody did, I think, it's in HVAC. Can you take us through that and the sort of like the sort of top level M&A strategy? Because you say you've successfully squirreled away over £17 million onto the balance sheet, which is, I think, works out about 53p a share.
I'm not saying anything, Paul. If it's 53p, then it's 53p in someone's pocket. I mean, the cash is there to be deployed. Yeah, I mean, there's no point sitting on cash. Well, you didn't used to get much, but you're getting a little bit more now. But you still don't get a great deal. It's there to be deployed, but it's got to be the right deployment. And typically, we're looking in the highly regulated markets, as I think we've discussed in the past. With niche supply chains and where we can make a difference. And so it's got to be the right asset at the right price. Now, the HVAC business we bought the assets. We didn't buy the business itself. So we just bought really stock, trading name, and a bit of goodwill. I think that was for sort of 850,000 with a bit of cost. So less than $1 million. It was around about turnover of 5 million last year, but it was loss making. So, we need to have a look at what we can do with the pricing and bring it in line with our Ormody business. We will be bringing the business back into our Bradford site, so that will hopefully save some costs. But inevitably, we'll probably lose a little bit of that turnover in, to get better margin contracts, and that's what it's all about. But it's good to save 20 or 30 jobs and have them moved over to Bradford. So that's great business. And of course, some of the other cash, as you just mentioned with Steve, we invested a couple of million into Adaptix. Further investment into Magetica, and of course there's always working cap for some of the longer term contracts. So where you say we've got 17 million, yes, it's there to be deployed. Yes, we want to generate some more. And of course the other thing is dividends. We've increased the dividend again to 1.7 pence, and of course that's an important part of our strategy for all our shareholders to give them value back.
What about the spare land, Steve? In terms of I know there's been a sort of like a delay with planning permission and all. I think I can't remember, but what's the status anyway with the spare land in Luton?
We started off with getting the planning permission there, the outline plan permission 2 years ago now, Steve, is it? Anyway, we got that, and then we got marketing it. We got an initial flurry of interest. Then COVID hit, everything really slowed down, and then eventually we had sort of one front runner. But then through COVID, what transpired, if you remember, was everybody started saying, I don't want to live in an apartment anymore, I want to buy a house in the country. So that kind of put everybody off for a bit, actually. The kind of interest deflated. So we just stayed still for a while and didn't do anything, frankly. But then more recently, we got more interest, a couple of interested parties, and one of them in particular is working on the potential at the moment. So we should know by the end of this financial year, by the end of May, whether that's a serious interest or not. And if it is, then obviously we'll look to see what the differential is for investors and see if it's worth going through the hassle of making the Luton business move. We think it probably still is, but it's got to be enough. It's a big move, so it's not worth it if you're not making a fair old differential for shareholders to go through the pain of that. But we're still hopeful about it. Let's see. Let's say we should finally know something about where we're at within the next few months.
Right. Actually, just one thing I didn't ask you on the healthcare product. Is there any opportunity sort of long term of sort of like having a joint product between sort of Adaptix and Magetica to incorporate both their sort of leading X-ray technology?
Yeah, potentially. Yeah, potentially, Paul. At the minimum, there's the opportunity to fuse the images using AI. So you get a very rich image, which is showing you X-ray, which obviously shows up the bone structures better, an MRI, which shows up the soft tissues better. So the guys are certainly thinking about that, and they're using common post-processing image platforms so that in the same sort of systems to do that. So that's already common between them, so that we have that opportunity later to fuse the images. Whether or not we end up with an actual one product which fits both, that's less clear. It's a possibility. We have discussed it. But that's quite far out. That's not anytime soon.
But even if you fuse the images, that'll be a huge benefit, won't it, to people at the coalface?
There are various conditions for people where that would be a big benefit, to be able to get the richest image possible, looking through your body basically to see what the injury specifics are and what the best recovery plan is.
Brilliant. Okay, then Stephen, just finally, what's the sort of like the trading in the last sort of 2 months in terms of since the half year, and likewise news flow going forward? I'm guessing it's all sort of like, systems go again.
Well, I mean, unfortunately, our year ends, half year end, should say, is November.
Yeah.
So then you get December and January, which are never always the best months. But we've got a great order book, and we're going into the second half in a strong position. So, the trading is where we expect it to be. That's not to say it's not, as I said earlier, without the trial and tribulations. The supply chain can be a bit unnerving sometimes, but that's what we are here to do, and that's to solve the problems, project problems or supply chain or utility problems, and get the pricing right and get the best value for our customers. As a supply customers, what am I talking about? Shareholders even, they're great. News flow, well, I think I had Nostradamus last time, but I haven't got my Gypsy Lee, glass ball here. We hope to give you some good news on some contracts. There are obviously contracts out, but we're quite careful with RNS news flow. We do put out reaches where we think it's important for our shareholders, and we do obviously update our website. But RNSs, we don't just put out for £500,000 contract order win or anything along those lines. It's got to be a big one, which is material, as you're supposed to do. So we'd like to get some out there. There's some obviously bubbling away, as Steve mentioned, with the further Sellafield contract. But there's also some on a lower level there. Some good ones in nuclear, as we've seen in the past, and they tend to be a bit more bulky. Industrial and defence. There's obviously some extensions on HS2, which should be quite interesting. Whether they'll hit is in H2, I don't know. Hydrocarbons always tend to be smaller value contracts, but more regular contracts and better aftermarket. So, we're pleased with where we are. We look forward to the full year and keeping you happy, Paul.
Yeah, well, you've definitely been doing that. I mean, I've just for investors, I've actually upgraded my sum of the parts valuation. I pushed through the numbers, and I've put it up from £5.60 to £5.80, which just shows that there's, another sort of potential upside of over 50% from my estimates anyway. So I think you're doing definitely the right thing, and the business looks in really good shape going forward. So big congrats anyway, and look forward to hearing what's coming down the track later on.
Great stuff.
Thanks, Paul.
Thanks, guys.